All right, all right. What's up, everybody? It's Big Chads. Let me know if you can hear me, folks. I've been switching over to StreamYard. I always have that music flowing. You folks know that from my emergency live streams. So that was me dancing without music. I'm sure that looked incredibly awkward, but want to make sure you folks can hear me. Just give me a shout out. Let me know if you can hear me. And great, you can hear me. So that was funny. I was sitting here grooving. I'm switching over to StreamYard. So we'll skip right to it, folks. Thank you for watching. Thank you for joining me. It's the 11th day of December, 2021. I am Big Chads. I'm really happy that you decided to join me here today. This is a new series on my YouTube channel. I'm doing some long form interviews. In my prior shows, the ones I have on Banter, and even like on my own YouTube channel, they're very quick. So I think this is a nice time to really dive a little bit deeper into some of these issues. We can get a little bit more long form. I took notes when I announced that I have this interview. I've got a bunch of great questions from you folks. So I'm really looking forward to that. Let's just jump right into it. Let's get my screen going here. So you can find me, of course. I'm on Twitter at Big Cheds. Our guest today is the one and only crypto Birb. He took his CMT3 test this week, which is awesome. I only took the level 1 test. I'm not ambitious or hardworking enough really to do that. So congratulations to him for that. Definitely check him out on Twitter. So for free stuff, let's get this going. You want to check out, actually, first of all, just to let you know, my book is available. It's on Amazon, right? It's doing really well. I've got the Audible version coming out in a couple weeks. 3 versions right now. I have Audible version coming out in a few weeks. But if you can't afford the book, right? If you can't afford it or you can't download it for whatever reason based on your country, go to my YouTube. Please hit like, please hit subscribe. You're here now. Go to the playlist, 50 Lessons Every Trader Should Know. I'm recording every chapter, 1 chapter at a time. I'll eventually have the whole book for free. And with this version, I'm expanding on each lesson. I'm pausing, I'm reflecting. I'm going to do a little bit of that today. I don't want to take up too much of the time, but I'll do a little bit of that today. So check that out. Eventually, I'll have the whole book up there for you as well. If you're brand new, you're just getting started and you want to know, like, where do I go? What do I do? You want to go and click on the educational live streams. I've got 3 videos up there. They're about an hour long each. And in these videos, I basically walk you through my entire setup. I walk you through why I use the moving averages I do, how I look at things, really to help you get prepared. You definitely want to watch these 3. They're master classes on educational, like technical analysis. They're educational master classes. And then, of course, the emergency live streams. I did a bunch of them last week to celebrate that sale we had for Bitcoin Live, the best in class educational platform for crypto. I do twice a week long form updates. We've got a wonderful community. So you definitely want to check that out. Go to Crypto Banter, hit subscribe, and go to the Trading Wisdom playlist. I do a weekly show with them. We have 12 episodes. I was interviewed Will Clemente this week. We talked about the on-chain dynamics. That was awesome. So definitely check that out as well. So we're waiting for our man Birb. He's going to be here in about 10 minutes or so. I'm going to start out by what I'm going to do right now is I'm going to read you a very brief section from my book. We're going to go to lesson 3, stay calm under pressure, and then we're going to talk a little bit about the Bitcoin chart, and then we'll get right into our conversation. So lesson 3, stay calm under pressure. In many ways, the difference between success and failure comes down to staying calm under pressure. To be a profitable trader, you must stay cool under pressure so that you can take advantage of bargain basement prices when they come around. When everyone else is panicking, you are scaling into your position because your low ball bid filled. With the comfort of this excellent entry, you are now watching the order flow to decide if you want to add more or wait for a bit and see how it plays out. It really is nice to have options. When panic hits the market, it's time for you to go to work because other people are making bad decisions, allowing you the opportunity to capitalize. By the way, this whole lesson, I have it in video form, lesson 3 on that playlist. And then the last quote, and I'll show you on the chart a little bit of kind of what I have in mind. The quote is, the next time Bitcoin drops $10,000 in a day, and it will, try to remember that's a buying opportunity, not a panicking opportunity, right? So what is that? So what did I talk about? So you want to be ready when other people are panicking, right? And you want to be prepared. So in prior videos I've done in my streams on Twitter, we talked about kind of how this top formed. We talked about the double top. You have two peaks. You have the trough, the high and the low. You have the time interval in between the peaks. In this case, it was the higher high, right? The up thrust, false bull break rather. And then we have the measured move, the height of the double top. So the double top completed, and we kind of bounced up, and we bounced into this head and shoulders pattern. So we'll get to that low ball bid in a moment. So, but the head and shoulders, and I've talked about this a lot on Twitter, and I've talked about it in my streams. The head and shoulders was forming. This was a head and shoulders complex with a wide left or two left shoulders. And the way to play this is you either play the break, right, the neckline break, or you play the invalidation. You don't mess around here in the middle, right, in the chop. All right. So the neckline break was 60K basically, which was the bottom of the double top as well. So that was a really clearly defined level. And then eventually the right shoulder formed here. And it was the bottom of the left shoulder and the bottom of the right shoulder. We're both right around like 55.7K area, right? So that was a level where you said, okay, if that breaks, I'm out, because the kind of bull thesis has failed, and it broke. So a lot of people started to panic, and the people who were not panicking, who were waiting, they kind of zoomed out and they said, you know what? Look at this level here. Look at this 42K level. Look at the highs of January. Look at the lows of February. Look at the highs of June, highs of July. Look at you're getting the picture here, right? Look at the lows of September. Look at this cluster here in end of September, and then boom, look at that wick. So what you did was I'm reading here in the book. What did I say? I said, when people are panicking, you're not, because your low ball bid filled, and now you're waiting to see if you want to add more and what you want to do next. It's nice to have options. So your low ball bid filled. Boom, 52, 42, 43K area, your low ball bid filled. You didn't panic. You knew the price was breaking down when that right shoulder failed. Pardon me. And you didn't panic. You scaled in and your low ball bid filled. So what happens if you missed that, though? Okay. If you miss that, it's hard. It's hard to pull the trigger on something like that. Because when the price is cascading down, it's easy to get scared. It's hard to have confidence. So you kind of wait around for a signal. Maybe you played the break here initially when it established this resistance, it broke up above that. That gave you a nice little trade that eventually failed. But we had a nice little thing happen last night. I tweeted about it while it was happening. We had this spring, or a false bear break. So we take the low of the channel. The price bounced, right? It came back and respected that low. It bounced again, and then it came back and respected it in an even shallower bounce at this point, and then flushed below it. But what happened? It kind of recaptured it. So you always want to pay attention to this. Is a great way. Like, these are really easy trades. You want to pay attention to when a support level that's pretty well established is broken and then recaptured. That's called a spring. It's actionable. You can enter your trade back here, right? You could have re-entered at 47.5, 47.4, 47.5. We've had nice follow through on that. So when that happened, I took some longs on Ethereum. I took longs in some of the stronger alts, the stuff that's been strong recently, like Matic and AVAX and Ethereum, and stuff like that. So that's what you do. You pay attention, you're patient, and you look for a signal that you can play upon, you can make a move on, right? When it's choppy here in the middle, like talked about earlier, when it was doing the head and shoulder, when it was doing that head and shoulders, we're trying to do a head and shoulders, and it's choppy. You can't do anything. You wait for a clear signal. Basically that's what you want to do. We got our man Birb here coming in just a minute. So that's what it is, right? You're staying calm under pressure because you've been tracking the move, and you kind of know when things are happening. Birb says he's here. I don't see you. This link. Don't see you. So we got our man here coming in. There he is. Oh my goodness. Look. Oh my gosh. What a beautiful face. That's my guy.
What's up, buddy? What's up?
Guys, this is Crypto Birb. Just to remind you real quick, you can find him. He's on Twitter at Crypto Birb. Do you want to just tell us real briefly about yourself, about the Birb's Nest, and kind of some of the stuff you've got going on?
Yeah, of course. So my name is Adrian. This is my real name. I'm also known as Crypto Birb. I'm on my path. I'm a candidate for CMD designation. This is basically a charter market technician path. I very much favor in like technical analysis amongst other ways of analyzing the markets, and I'm busy trading Bitcoin legacy markets as well. I'm interested outside. My interest lies also outside the crypto itself. For my main background, I'm a chemical technology engineer combined with the other top school of economics, graduation of both masters. I'm the founder of the Birb, which is an educational platform for traders and investors since 2017, because that was actually, we're going to celebrate in about 10 days from now. We're going to celebrate like the 4th anniversary, so it's quite good. I'm also co-founder of Yellow Block. And of course, all that I share is just my personal opinion and shouldn't be ever taken as a professional investment advice.
Wait, are you saying that I shouldn't go long or short 100x on every tweet you put out?
Well, that's your guess, man.
Let's jump right into it, Birb. I love that intro. I will say that there's several things I admire about you. I admire how hard you work, and I admire the fact you've studied technical analysis professionally. I'm on that path. I'm way behind you, but I know that, a lot of people think they know things, they watch YouTube and they trade on that, but like there's a level beyond that where you want to know what's the real answer. And once you have that, you can teach and pass on that knowledge. So I definitely admire that you've done that.
I appreciate it.
You got it, brother. I'm gonna come at you now, right? We've got some great questions. So
Do it.
The people knew you were coming. They want to know, basically, how did we get here, and were you too bullish? Were you too bullish? October, November, December.
Where was I too bullish?
Yeah.
As in overly bullish?
Yeah, like was it fair to think we were really gonna hit 100K in November, or was that something that looked like it was gonna happen and it just didn't? What are your thoughts on that?
Yeah. Basically, I don't think I was perhaps too bullish. I mean, I think it was based on the technical analysis. Something that is, I should say, in limited predictability, in limited predictability, in limited probability. I think it was completely fair to assume, certain seasonality effects that you saw throughout the past years and past cycles, that it would some sort of like not even repeat per se, but at least get close to it, right? And month here and there, nobody knows when it's actually going to peak, when it's going to happen, right? Some some indications on the technical analysis side, on the on-chain side, which I also would love to touch upon today. The fundamental side, like intermarket side with the inflation, sorry, all of that combined, makes me bullish, and that's it, right? I don't think I was too necessarily too bullish, right? The fact that I was wrong about predicting time, well, that doesn't really bother me too much, because I like technical analysis doesn't predict time, right?
Yeah.
That's time factor is the biggest weakness. Like, how can you guess what and when and with whom something is going to happen? Earlier today, you actually saw, I think this was an amazing Amazon warehouse, collapsing somewhere in Illinois, Chicago, right? You cannot predict that with charts. No technical analysis is going to tell you that with charts. Those are some sort of certain price strokes that you see, like president assassination, or you see some military conflicts expanding, wars, escalating. Like, charts don't tell you that.
It doesn't tell you. It tells you. That's a great call. So what do we think now, though? Maybe you can share your screen too whenever you're ready. I'd love to get a sense from you. Maybe you can present like the bull case and maybe the bear case, and just give us your thoughts, kind of where we think we're going.
Yeah, sure.
And let's add you to stream.
Yeah, 1 second.
Okay. All right. And we go.
Okay.
Awesome. Thank you.
Yeah. So I basically love, daily and mid-daily charts. Those are my main timeframes that I always look at, right? And I think the biggest misunderstanding about Bitcoin and trading and investing and technical analysis is that a certain asset can be all bullish, bearish, and neutral all at the same time. And there is nothing exotic about it. This is purely logical, because markets, and in general, like real life complexity, tends to follow certain fractal rules. as in fractal rules, something that is indefinitely self-complex patterns, right? Triangles made out of triangles. And same way, this very candle that is right here, right? It consists of, even if you have a look, it consists of smaller candles, right? It consists of 24 hourly candles, out of which every single one consists of 1 minute candles, right? So depending on the time frame, like 1 minute chart can tell you it's an upwards trend, right? The hourly chart can tell you it's for example, like some sideways that's going on. 12-hour time frame can tell you it's local medium time frame downside, right? Daily can tell you it's an upwards trend, basically, because it keeps making low, higher, low, higher, high, high, higher, low, higher, high, higher, low. So depending, again, and here's the perfect case and explanation and reasoning. It's very logical. That market can be bullish, bearish, and neutral all at the same time, depending on the time frame, right? So the fact that, for example, I make my sort of like predictions charts, analysis on daily chart, and I'm talking about the perspective and time scope that takes horizon of couple of months, right? And the fact that when I post a chart, so many people come at me then later because I post a chart on a daily time frame or on a weekly time frame that takes weeks and months to develop. And they say, like, after 5 minutes, oh, look, the chart dropped, your technical analysis is shit, right?
Yeah.
So that is not really how it works, right? You pick your certain time frame and you observe the time frame to see how it develops, and develops, in trends, and develops in patterns, which are sideways. Basically, long-term perspective, ever since 2021 started, right? This tells you we are practically trading in some form of a range, right? We are trading in this local sideways, right? Because we, like, even if you take this large rectangle, right, we are moving sideways. Like, you saw, of course, some local sweeps probably out here, some local sweeps on the highs. So, but it's still non-directional long-term movement, right? Yeah. So non-directional long-term movement, as in sideways, is usually a continuation pattern, as long as the continuation pattern for the prior and pre-prevailing trend, which is bull market. The primary trend is a bull market. The primary trend is upwards. You can tell also this is like 50-week moving average, right? So it tells you the 50-week, which is almost 1 year of price action, captured in an average price. And this tells you basically we are on average, the fair price cost of Bitcoin over the past year, over the past 50 weeks, is on average $47,000. So we are right now trading at fair price.
It's a key level, huh?
It is a key level, but it doesn't mean, like, there is something that is called like an anchor bias, right? And we as people, like, that is something that behavioral finance explains very well. And we as people tend to hang on to our anchors very strongly. So let's say you have a level, right, which is I don't know, $42,000. Let's say let's talk about this low, right, that happened out there. Let's assume it's around 42,000. So if you anchor too much about it, right, and you see the price of Bitcoin dropping to 41,999, then it's sort of like may invalidate your thesis about bullishness, but how does that correlate or entangle in the longer time frame, right? That does this $1 slippage or slip, beneath your anchor level actually invalidate that bullishness of a 3-year long trend? And the answer is no, right? So we are talking more of zones. You don't get, again, crystal balling here. Nobody's going to tell you when Bitcoin is going to be in the next 5 minutes, 5 hours, or 5 days, 5 weeks, and so on and so forth, because there are too many variables, right? The best prediction you can get is actually on the day ahead. And anything else is just, more or less calculated guess, and that's it, right? But long-term trend, even if you turn off the chart per se, right? This is a long-term trend. Is it going downwards? Right. No, it's fucking upwards, right? This is bull market, and that is what I see in the charts.
So do you think we're in like a weekly ascending triangle maybe? Or, I mean, you say potential, it's a rectangle, and rectangle is probably going to continue because trends tend to continue. So do you think maybe we have like a, can bulls say, hey, it's an ascending triangle? What do you think about that thesis?
Yeah. So again, basically guessing the patterns, right?
Yeah.
I mean, guessing patterns in what way they unfold, on a short-term basis of if a price is going to, new $500 below or above to make a complete pattern or not, or whether it presents a gap on futures or not. There are so many variables that can literally distract you from what's real about the chart. And what's real is actually this very trend, right? So when you turn it off, this is what's real, right? The average trend of Bitcoin is upwards for the past 2-3 years, and this is the real trend. So if somebody comes to me, on a weekly time frame and says, "Hey, this is looking at the bullish, at the bearish, I should say," right? Then why don't you just play the chart and like, aren't you not contradicting what you're seeing in the chart, right? And so aside from that, the patterns, right? Whatever the patterns just present you, if you called it, symmetrical triangle printing, some higher lows and lower highs, some contracting consolidation or expanding consolidation where it keeps, expanding. This is all form of that of sideways, right? And sideways is not directional. It includes a lot of noise. It comes with a lot of wicks. It comes with a lot of fake outs, bull traps, bear traps on top, on bottom, and there is nothing, I should say, exotic about it either. This is something very natural, and markets actually tend to trend for not trend but go sideways for most of the time. And whatever you name that, though, right, it is still encapsulated and defined. The pattern is defined by its extremes, right? So we are talking about an extreme high and extreme low. You're very well familiar with chart patterns. So, but for those who actually are not, that this is something that we call a base size, right? A base. The pattern has its base, and the base for this pattern is basically, well, from 28,000 all the way to 69,000 to 68,000. Yeah. So which makes it $40,000 base.
It's pretty big.
Right? It's pretty big. Yeah. And this $40,000 base is basically, based on the technical analysis, is rather of continuation, because it wouldn't be of continuation if the trend on average was, for example, sideways or was going downwards. Then I would not really count on bullish upside breakout. But as long as this smooth, upside long-term curve is moving up, is ascending, then to me it looks like a continuation pattern, which matches a lot of other sections and fields of analysis, not only TA part, right?
So if that's the case, what would you see maybe that would concern you, that maybe the macro is breaking down, maybe on the weekly or daily? What are some things, maybe just, someone who can't watch all day like me and you do, what would you be watching out for?
So basically, again, even if we take, I'm talking about the real part. I'm not talking about gambling and 1 minute time frames, right? But even if you take this longer time frame, right, it's moving into sideways. Then even the side, just like you see on the top, right, those local fake outs, you may see something like that, even like with the fake out on the bottom, and this would still not make it bearish, right?
Yeah.
Like, of course, on the medium time frame, it would look like shit, and then it would be trade below the trend. Perhaps it would take an extent into something way more serious. But the fact that, for example, it may revert back to 28,000, this will literally still not be a bear market, right? But guess what? If you buy $65,000 or $69,000 and leverage it times 20, then you need to watch your portfolio burn until you actually zero it, right? Yeah. But the safest way to actually trade and place your bets is based on spot, cash market, right? You don't get leveraged. For example, I got my Litecoin. I think it was 2-3x on Step as well. I was busy preparing for my CMT pre-exams, right? And there was this nuke day. And of course, like a lot of altcoins exchanges were seeing completely disproportionate fluctuations of the price. Some exchanges were showing like $5 for Chainlink or $8 for Chainlink, Litecoin, and so on. So I was seeing, I think those what I haven't checked on the one leverage long on Litecoin, so I don't know if it's still there. Those low 2x, 3x Litecoin and a Step futures calls, trades I took, somewhere approximately around like $140, $150. They got swept, they got liquidated, right? Yeah. But guess what? I'm not putting my entire life savings on on the risk of liquidation. I'm putting 0.2%, right? Something that even if the wind blows, it does completely blows it away, then I don't even necessarily feel it, right? I'm not really depressed about it because that was the risk I was taking, and I was very aware of the fact of this risk, which is exactly why I didn't dedicate more than 0.2% on that, right? While what many other people do is they actually get their life savings, they put it on leverage, usually on the top, right? And they see it melt down to zero, and then they come up and say with the conclusion, it's not my fault, it's technical analysis fault, or it's Big Chat's fault, or it's CryptoBurb's fault, or it's a president's fault, it's government's fault. Whoever you fucking meet in the street, suddenly becomes your enemy, because that was they forced you to put your entire life savings on the liquidation risk. So so of course I'm like putting the irony in here, but basically like if you trade cash, if you trade spot, right, you're not really bothered by that. Of course my portfolio took some hit because I was trading my own plan. My own plan was that potentially we would see a peak, in December this year, if we account the seasonality of the past years, which was, in my opinion, completely fair assumption, right? But then occasionally you have the price shocks, right? You have something that is exogenous factor. You have something that is not really predictable. So just like I said, you don't really get, with charts to conclude upon Amazon warehouse collapsing in Chicago, Illinois, which may, for example, be, disturbing the markets here and there, right? Or you cannot really necessarily predict new COVID variant, like coming basically out of nowhere, right? With Omicron, whatever name you assign to it. And like charts don't tell you that. So what is certain and sure is that price shocks, unpredictable price shocks, something that you cannot predict with charts. They have come many times. They are coming somewhere on the planet right now. You see that on the commodity markets, especially when there is a hurricane or flood or drought and wildfires, and all the crops are going to waste basically. Then this shrinks and limits the supply very aggressively, and the price tends to spike up immediately as a reaction. But this is like technical analysis doesn't tell you that, and many people take it all too literally, right? And like to me, this price shock, this price shock that happened in here with this, like if you have a look at the hourly candle, this was 20% hourly candle slide, right? This was something that doesn't really happen too often. You saw that perhaps on the COVID crash, March 2020.
Don't you like that when you see that? I get excited when I see that because I feel like that's, it's time to rebound a little bit. You know what I mean?
Well, those usually come this all happened. This move happened in 45 minutes from $52,000 to $42,000.
Yeah.
Like if we measure that again, then this gives you basically the price range, right? Mm-hmm. Sorry, this is the dates. This gives you the price range of almost 20% in a matter of 45 minutes. So we're talking about, $1 trillion market collapsing 20% in under 45 minutes, right? That is something abnormal. That is something that way exceeds your, I should say, healthy, fair assumptions, expectations. And, the only way you can avoid getting impacted by the price shocks is basically not trading at all, right? If you don't trade, you don't have this problem. But if you trade, if you're a trader, if you invest actively, not passively, if you're not buy and hold trader or investor, then you're going to watch the price shocks, and you better get used to that because there are going to be so many more of these. But these price shocks, this very local price shock that happened, right, or whatever you named that. I was looking at the lower time frame charts, and there was no volume basically beneath $47,000. So this tells me that this was more of thin order book, case rather than the actual selling volume that would accelerate the bear market or something, right? If that was a proper bear market, then you would see some heavy accumulation of the sell order somewhere beneath the supports, which would invalidate that. Which would validate the thesis that most of the market was actually centered and focused around selling off the lows just for the sake of it, rather than having thin order book there. But this, like if you again take this long-term chart, right? That is something that I'm interested in. then this is it. Like if you zoom it out, you don't even see that, right?
Yeah.
This looks like this, like
Mhm.
you have seen many of these. And
Mhm.
did that really disturb the long-term direction? No. So this is my conclusion. This is something that happens. You don't never know when it happens. You know there's going to be many 20, 30, perhaps 40% declines, spikes, as I was expecting $50,000 peaks. $50,000 declines on a peak day. Something like that will happen. You have no idea when it will happen, but you can be practically certain and sure of it that it will happen at one point. And you can be either as many times and as much time out of the market to avoid that, or not trade at all. And that is it. Otherwise, if you trade it actively, you're always in danger of getting the price swings.
So I'd love to hear your thoughts on like Ethereum, and maybe just give us a quick update on Litecoin too. The chat rooms kind of wants to know, what your thoughts are on the Litecoin chart, and then maybe even roll into Ethereum if you don't mind.
Mm-hmm. Yeah, of course. I was actually sharing my Litecoin viewpoint on yesterday's webinar. But so this is again the weekly chart, right? Because when we are talking, I assume most of the questions by default ask if my thesis is invalidated or something like that. I don't have a chance to read the comments right now, but
Yeah.
But whether what's going to happen in the next 5 minutes, because I'm not going to tell you that anyway. I would expect, most likely to ask myself a valid question, if my thesis is invalidated, right? And my thesis was that I would expect $1,000 Litecoin, right? Of course, time is the weakness, and I have no idea if it's going to come in the next 5 minutes or next 5 hours or next 5 months, for example. Nobody knows that, right? But it's fair to make certain assumptions. And the way I see it, it's first of all, my long-term thesis is not invalidated, but not just because I say so, but because this is what the market tells you, right? So if you have a look, this is a clear consolidation with a higher high, higher low. Higher lows, lower highs, right? So contracting consolidation, triangle pattern, just got local low swept, but it still managed to climb above it. So it's a liquidation kind of like process only, and liquidity gathering. This didn't invalidate the long-term outlook of mine, mainly because, well, it didn't impact or endanger the trend, or I should say the lack of trend, right? The lack of trend is right now kind of clear. Again, this is contracting consolidation as in symmetrical triangle, and this is not trending, basically, right? This is ever since April, earlier this year, or April or May, you see Litecoin trending in quite a volatile range, right? Just like Bitcoin. And it's still ranging, in the previous area of weakness, right? The previous area of weakness, which is 2018 peak, right? And 2019 peak. So we can tell it's basically congesting and converging, in this previous area of weakness, which is the bear market peak with the new highs established already, or 2019 peak. So it's consolidating, showing, well, arguable strength in the previous area of weakness, right? This is, plus the trend is upwards. So this technically to me looks bullish on the high time frame. On top of that, we, if we take the daily chart, right? Then there are several like anchored view ups, volume-weighted average prices, which are anchored, right? There is one that is anchored, this was June 2020. I cannot recall what that was for, but we can even anchor that at the bull market's start, right? Which was December 2018. And you can tell that we are still moving. By the way, it's showing the fair price of Bitcoin based on volume and price. This is a combination of volume weighting, right? Volume weight, which tells you basically that it's showing you the price based on volume, where the average price of Litecoin, ever since the Litecoin started the bull market, is based on price and volume. And it's telling you that it's basically $120 right now, right?
Okay.
Short-term peak anchored, volume-weighted average price tells you the fair price is 180, right? We are trading below. We are trading above the long-term, right? the long-term 3-year long volume weighted average price, but we are trading below the shorter term, or I should say it's still long term because it entails like more than half a year of price action, right? Ever since it peaked in April. So it tells you right now that the fair Litecoin price is basically, from the long-term point of view, anything between $180 and $120. This is not me saying that. This is the market defining the volume and price, right? And there is no room for like, how do you call that? Overestimation or something like this. This is basically very clear level pointed by automatically by the volume weighted average prices. So anything trapped inside this is basically, to me, like this long-term pillow, right? Like this long-term pillow that Litecoin is supposed to keep bouncing off until it starts continuing, or until it continues the trend finally. And the trend continuation basically can be defined, well, more arguably, as, by the way, my parrots are chirping. I don't know.
How many do you have?
It's great. It's crazy. They always wake up whenever I have webinars, so don't worry.
How many parrots do you have?
It's three of them.
3? Oh, nice. That's cool. That's cool.
Yeah, the beautiful creatures.
Yeah.
And you would have, an upside breakout, right? Potentially is something that could validate the upwards trend starting, but more safely, I should say it's safer bet to assume the trend continuation in the upwards direction whenever we mark an established trading over the previous all-time highs, right? So be it $20, $50, $250 or even $140, $130, whatever, this is still a long-term trend confirmation, which tells that it is a long-term trend continuation. Then you still have a lot of upside growth for there. If it's going to be like again 5 months or 5 weeks, if it takes it, God knows that. I don't know that, right? Now there are certain assumptions that I can make, and like I trade my own plan, right? I was wrong about my estimations about the bull market potentially peaking in December, right? But the assumptions never can include the price shocks because you can never tell when they come. Yeah. So the way I look at it is just that the price shock and this abnormal volatility coming from the COVID environment and all the FAT that you were saying, from Evergrande, from Fed inflation and so on. And there is a lot of volatility that you cannot predict. And all it does is it doesn't, just like, I was reading in the CMT3 book, it is statistically proved and confirmed that the price shocks do not endanger the long-term trend trajectories. They are only the short-term like disruptions, that the noise intensification that is there to shake out the weak players, probably clear the market out of the leverage, and then it usually pulls back and continues the prior trajectory. So that is the way I look at it, right? That is the trend to me.
So what about Ethereum? I see Ethereum has been so strong, and kind of what I've been saying is, when Ethereum started to break out in October, late October, I started to get a little more concerned about Bitcoin. Mm-hmm. And you can kind of see with the Ethereum BTC pair trending up that also kind of threatens the hegemony, of Bitcoin. What are your thoughts, on Ethereum? And do you agree that Ethereum breaking out, it makes it harder for Bitcoin to continue?
So let's start from the other part.
Yeah.
So you're asking if Ethereum breakout makes it harder for Bitcoin to continue?
Yeah, given the climate, normally Ethereum breaking out is when Bitcoin's consolidating, right? When Bitcoin consolidates and the money kind of flows downhill, and Bitcoin, then Ethereum, and then Litecoin and alts. We've talked about that cycle before. Are we in that point of the cycle where Bitcoin's consolidating and Ethereum is the king right now?
Mm-hmm. The way I see it, it's kind of like maybe not the other way around, but it's kind of like a tiny bit different angle leading into different conclusions. Basically, I don't see Bitcoin troubling really over Ethereum, but I see Ethereum taking opportunity over Bitcoin, right? So it's more of Bitcoin's, I should say, local, sideways or whatever noise you name it, right? And in that noise, like more eyes are turning towards Ethereum, and it's just, profiting out of that. So it's Ethereum is a result rather than a causing factor to me. And so basically, you saw this long-term trend, long-term sideways or lack of trend. Look at symmetrical triangle that lasted ever since, like, for the entire year, basically. This is Ethereum BTC pair, which tells you that what out of pair Ethereum and Litecoin and then Bitcoin, what is more often peaked or what is more demanded. And this breakout tells you that locally Ethereum is more demanded than Bitcoin, right? It tells you that Ethereum prevails with Bitcoin, which tells you again that this comes from the demand. Price movements come from the demand and supply fluctuations. So you see this local confirmation for a new trend continuing, right? The upward trend continuing, of course. You see so many other indications, I think, just like, whatever you bring for the trend lines. This is unquestionable to me that Ethereum, again, this is just my opinion, but assuming technical analysis, is undisturbed, is not disturbed by any exogenous news like world collapsing or asteroid crashing into Earth, or the fact that we can all die tomorrow, for example, just like dinosaurs did.
Yeah.
So assuming something like that doesn't happen, right? Ethereum has proven with this strong upside breakout that the new market direction, I should say, the prior direction of the market is about to resume, right?
Yeah.
So we are seeing something that may take us, in my opinion, into highs, right? Whether it's going to take it there, well, I don't think Ethereum BTC pair is leading indicator. I think it's just a confirmation. I think it's a lagging indicator in a way that it just proves and confirms something, rather than people see it, look at the chart, and they say, okay, I'm going to long Ethereum. I mean, same way that dominance is not really a leading indicator. The dominance is a result of what happens in the market, right? But it's never, it's not that people see, okay, dominance are dropping, so I'm going to, for example, long altcoins.
A lot of people are doing that, though. I think you see a lot of people are. Sorry to interrupt, but yeah, people do that. And I think it's strange because it's lagging, like you said,
Many people do stupid things,
Me too,
but guess what? That's their problem, right?
Yeah.
Like, many people will, of course, love you to take responsibility for your actions, but frankly speaking, like, probably 90% of the people out there shouldn't be even touching trading, because, like, I was giving this example in my yesterday's webinar. Like, before I got my engineering studies, I was applying for doctors for medical university, and anytime I go and visit the doctors, somewhere, I don't really like visiting doctors, right? I have this it's not an anxiety. I mean, I just don't like seeing surgeries performed. I just don't like it, right? So like, I would make a terrible doctor, right? Like, not everybody can be a good doctor, not everybody can be a good engineer, not everybody can be a good musician, right? And same way, not everybody can be a good trader.
Yeah.
So the truth is that just because of your trading, it doesn't mean you're going to be a good trader. You can completely fuck up all your money, right? Get your family in ruin, and, like, it would be just like you were wanting to perform a surgery over a patient, without having doctor's qualifications, because you would make you a terrible doctor. So same way, you can trade away all your money not knowing what you're doing completely, and that is what the vast majority of the people do. And instead of realizing that, well, they choose to live in denial in their own bubble, where in their eyes everything is perfect about them, right? And then if they fail, this is called a self-attribution bias. And if they win, that's their genius. They are the next Warren Buffett. They are the next Elon Musk. They are the next Jesse Livermore, right?
The next crypto Birb.
Chats. But when they fail, it's it's technical analysis fault. It's president's fault. It's like, you name it, right?
Yeah.
And this tends to get completely irrational. So that is the harsh truth. Not everybody is a good doctor, and not everybody will be a good trader either. And this applies to 90% of the people on statistics, like, if we are to trust statistics. So instead of thinking, you're invincible, start thinking of what can I do not to fuck up and join the losers 90%
Yep.
of the market,
Yep.
right?
How do
What
I
can we do?
survive?
Exactly. How can you make sure that you're not 10 out of 10, 9 out of 10 people who keeps losing, right?
So
That's
Birb,
it.
we got 5 minutes left, brother. You before we wrap, you want to give us a couple alts maybe you like, some mojo here. What do you like in some alts, maybe? And we kind of finish off with
Hmm.
that.
Yeah.
Off the top of your head, right? Let's put you to the test.
I've heard enough of this already. Well, I don't know if it's going to show up. I like watching this more as this is a DeFi perpetual index, right? I mean,
Okay.
DeFi perpetual futures and DeFi index per se on the FTX. And well, I get that as this is aggregated market action. This is not a price. Aggregated market action averaged, for DeFi industry, right? So what it tells me right now is, first of all, just thinking out loud, you see a flattening curve on the average, right? So this is 200-day average, and
Okay.
50-day average. So we are trading both below it. Usually what markets do is they tend to revert to the mean. So whatever happens up here, perhaps may drop another 20%. But what happens in here eventually is supposed to pull back into this region, right? So perhaps, if somebody is of mean reversion plays, this is a momentum trader or something, they can, for example, chase the low somewhere over here. I don't know if it's going to be now or next week or next month. But all that I know is that, if you compare, let me actually just perhaps hide it. And let's add very quick, if we see that. Total market cap of altcoins. This is total market cap.
Total 2, right? Is it
total
total
2?
2?
Yes.
Yeah.
So what do you see by total 2, right? Oh, we can actually just get it to.
You're way better than I am with TradingView. I don't know any of these things, so good. It's fun to watch you zip around.
Okay, this is regular. This is regular, so that we can move it all around. So
look at that, huh?
Yeah. So what you're seeing here is, that altcoins on average, like this was the peaking area, right?
Yeah.
Of April, May this year. And what you can see is that altcoins per the orange, they already made new highs.
Yeah.
Right? The altcoins total market direction already made new highs.
Yeah.
But what's different about DeFi is that it's lagging. It didn't establish new highs. So this technically to me generates more opportunity than the mainstream altcoins. A lot of DeFi altcoins are actually like heavily discounted, of course. It doesn't mean every single shitcoin random you buy come rocket into bullbuzz or whatever you buy, it will immediately go up 100%. But I see more opportunity because of what I'm saying and missing the new highs. I'm seeing the deeper retracement coming, and hence bigger profit opportunity for the DeFi that I see for the mainstream altcoins, right? So perhaps it would be a good idea to search for some good undervalued DeFi coins that everybody forgot about, but they still generate fundamental value for the market when they've been just working quietly for the past time, right? Because this is what the opportunity is. And I don't know if it's going to be again like Uniswap, for example, or like Uni or Polkadot or whatever, right? But I'm just giving you some potential tip to where to search. And to me, if I compare altcoins, mainstream altcoins, and DeFi, to me, it's better to search for opportunities more profitably for DeFi rather than for mainstream altcoins. That is the conclusion I want to leave everybody away with.
I love it, folks. This is Crypto Birb. He is the man, the legend, the myth, and the beard all in one. Do you want to just quickly a couple words just to say goodbye and where we can find out more about you, all that good stuff?
Yeah, I appreciate it. So first of all, I want to say thank you for your chance to getting me on the show. I always very much respect you, and I consider you like a great market technician, and I very much value you. And like everybody, make sure you actually follow, and just hit a subscribe and then follow everywhere that Chad goes. This is definitely more than worth it. And beyond that, I want to say to everybody that, again, you want to make sure that you are better than 9 out of 10 people. If you're not, and if you choose deliberately not to do anything about it, then you probably deserve to lose that money, because just like Chess says, it's going to find better owner.
Yeah.
And it's just objective, right? And there is nothing subjective in that. The market defines who's right and who is wrong. But depending, like being right or wrong, it doesn't mean it's going to earn you money either. So I want to kindly encourage everybody, as the final word, to keep learning, to keep improving. And this is where the value is. Like, if you don't know what to invest in knowledge. Get yourself a good book and read. And this book is read is going to be getting you so much more profits than whatever $10 you put in shitcoin. So invest in yourself, invest in knowledge. Don't stop learning, and take responsibility for your actions. That is something that I think people should be getting these days.
That's the way to do it. I love leaving it on that, man. I really appreciate you having me. Folks, make sure to follow him on Twitter. I'll show you that information in a minute, but I know you got to run. I know it's late where you are, so I really appreciate you coming on and joining us here, man.
I appreciate it, and take it all the best.
All right, brother.
Stay safe.
Good luck, man. Thanks.
Bye-bye.
Peace. That's my man, Birb. Let me show you where to find him. He's on Twitter. He's at Crypto Birb. He's the founder of the Birb's Nest, co-founder of YellowBlock.io. He's a CMT. He's going to be CMT soon. He just did the level 3, which is awesome. Anybody who takes technical analysis seriously has my respect. So that was a great guest. I'm going to wrap it up a little bit with a little bit of analysis on where I think we're going. I want to just clear everything I've done so far. And basically, we talk a lot about momentum and the larger trend. The weekly trend, zoom out, right? When in doubt, zoom out. And the weekly trend is your friend. But we need to keep an eye on something. We want to keep an eye on this 50-period simple moving average, the orange line. We have not closed below the 50-period moving average, since April of 2020 in the 8K area. So your job as a technician is to identify the trend and then ride it while it's profitable. And while you're doing that, you want to look for what's called signs of trend weakening. All right. Back here on the weekly chart, we saw signs of trend weakening with that first close, boom, below the EMA 8, right? Back in April, that was a sign of potential trend weakening and pausing. If we close below the MA 50 on the weekly, I'm going to get concerned. I'm going to notice the trend is weakening, and I'm going to start to focus really back in the bottom of the channel, right at that 30K level, right? If we close below the weekly 50, personally would suggest to me we're likely to test and probably break that key horizontal level, highs of January, lows of February, highs I pointed out to you earlier, right? This key horizontal. So keep an eye on that weekly MA 50. You also have the daily chart. A trend is defined by what that blue line is doing. That weekly, the 200 period simple moving average. When it's rising and the price is above it, it's bullish. The MA 200 now is flattening out a little bit, right? It's flattening out a little bit. And the price is right at it. So if we close below the MA 200, I'm going to start to get a little bit cautious as well here on the daily chart. All right. So we're at a very key moment, right? We very well may look back and say, I cannot believe I didn't buy some here at the weekly MA 50, right? I can't believe I didn't do it. Look what the price keeps doing, right? Very well maybe kicking ourselves later for not recognizing a potential ascending triangle where you have a rising demand and you have a very clearly established horizontal resistance. And we could say, all right, what's that tell us? Take the height of the triangle, right? We take the height of the triangle and we extend that from the breakout point, and that would get us to about 100K, right? When might that happen? March through May. That's my bull thesis. That, I'm going to stick with that thesis until we close below the weekly MA 50. As long as we hold this level, the orange line, I think we're still on track. So, overall things look fine, but we need to hold those key levels, right? In the meantime, right, you need to manage your positions. If you're new to trading, bet less, scale down your positions. Instead of coming in all at once, break it up into 3 or 4 positions, right? Use smaller entries. Position yourself for success by being more nimble and more agile with your funds. Don't just throw it all in at once, right? That's how you get yourself into trouble, by quote unquote just aping in all at once. So, Bitcoin's incredibly strong right now. If Bitcoin overall is incredibly strong, but it's threatened. It's threatened right now, right? It's threatened because it's below that key level 53K, which is important, right? That's the macro or the big picture lower high. We had that larger equilibrium. We have the highs, the lows, the lower high, the higher low, and the breakout. So the ideal case for Bitcoin would have been to really hold this 53K level, right? We did initially hold it here when we formed the head, that lower time frame, head and shoulders that had formed but not completed. So if you want to know when momentum is switching back, you can really start to think about risk on. It's going to be back up above 53, 53.5, kind of that area. In the meantime, we're in a classic scenario where the price is being pushed down by these moving averages. It briefly got above the 8, blocked at the 34, and now it's just, you can see here, rejected at the EMA 8. We have the EMA 8 on the daily, the green line, and the MA 200. So which one of these is going to give first, right? Really two very critical levels to watch here. And really, whichever one gives first may be a clue about the momentum that's to come, in the next week or two. So that's kind of how you want to look at it for my money. I continue to maintain that you want to be playing Ethereum over Bitcoin right now. That's reflected in the strength of the Ethereum Bitcoin pair chart. We had a very nice throwback. A throwback is when you have a resistance level established. The resistance level is then broken. You break out, and then you come back and you retest it, right? So this is a really beautiful, gorgeous chart. This just tells us that Ethereum is likely to continue to outperform Bitcoin, okay? Ethereum, if you look at the USDT pair chart, it's really right at that key level, right at 39.54K. This is a level you want to see hold. And it's kind of been dropping, and this is where bulls have been jumping in and saying, hey, no lower, no lower. So this is the level you want to see it hold. But if you're not, if you're not sure, do nothing. But if you're looking for something to play, I wouldn't be going for Bitcoin here. I'd probably be going for Ethereum, between those two. So now you have some stuff to watch, kind of understand my main thesis about what we're doing here, where I think we're going. I'll just remind you, of course, you can find me. I'm on Twitter at Big Cheds. I like to think of myself as a chart guy, a newbie helper. I tweet out academic observations about price. I try to present both the bull and the bear case. I put out a tweet earlier. I said, a true chart technician can articulate both the bearish and bullish thesis, no blind spots. So if you're kind of ready, even with big volatility, you're ready for it, right? We just had that big flush, and yes, these things are hard to predict, as Birb talked about, but we knew with strong confidence that we were headed for a big bear move when we lost the right shoulder here, when we lost 55.3. So, that's, you can be ready for that. You can mark your levels in the chart and kind of know when momentum's changing and shifting. What are we going to do here? Are we going to bottom? I don't quite know yet, but we know what to watch for momentum. I talked about that earlier, 53K flip, and the weekly charts, weekly MA50, daily MA 200. If you like the book, I did a brief wisdom earlier. I did a brief selection from Trading Wisdom earlier. It's on Amazon, Kindle, hardcover, paperback. Audible version right now is being processed, so it should be out in like eight days. So Audible's reviewing it. If you can't afford the book, or your country, you literally can't buy it, I have it free on YouTube. Ched's Trading. Please hit like. Please hit subscribe. I'm going to do all 50 lessons. The next lesson will be a week from Monday. I've been streaming a lot recently, so I'm going to kind of give myself a break on that. But a week from, what's today's set? So in 10 days, I'll do lesson 10. And lesson 10, what is lesson 10? Just so you're ready for it. Lesson 10 is going to be emotional mindfulness. So that'll be fun. So, but eventually I will do all 50 lessons. Okay. We're going to get them up there for you. Check out, if you're brand new, you must click on educational live streams. All right. You want to click on educational live streams. I take you through my whole setup, what moving averages I use, how I set up, what indicators I use, how I use them, how I structure my trades, how I use stop losses, how I take profit. Check that out. for sure. Check out my emergency live streams. You can really see, honestly, how the chart broke down. I did a lot of streams right from that like high 50K level right down to when it flushed to the 42K level. So it's kind of fun to see kind of that crash in progress. Check those out as well. Go to the Banter YouTube, you hit subscribe, and you go to Trading Wisdom. I have a weekly show with guests where I do trading wisdom. I do some brief chart analysis, and I have great guests like Birb. I haven't had Birb yet, hopefully in the future, but we had Will Clemente. Last time we were talking about on-chain dynamics for the last show, so that was quite awesome. Definitely would encourage you to check that out. If you want to get serious about technical analysis, I'm a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. I've been posting regular updates for years, twice a week, long-form market updates. I do not miss these. Even when I'm on vacation, I'm thinking about you, Bitcoin family, Bitcoin Live family, and I'm posting an update. We have a great group of folks there. So it's been fun. I'm really glad you folks joined this. Join me for this is the first installment of this brand new series on my YouTube channel. If I can get to it, did I have to hit refresh? Let's see where it is. Boom, long form interview series. This is the first one. So we had Birb for number one. That's awesome. I'm going to do more. I'm working on some great new guests. So I'm excited by that. And I'm excited that you decided to join me today on your Saturday, your busy day. Trading's really hard. I've been doing this for a long time and I've suffered so badly. I've made so many repeat mistakes, my greed, my lack of planning ahead of time, my lack of discipline, all these things, came back and bit me in the nose. And that's why I'm hiding my nose, because I have no nose. It bit me in the nose, right? My greed and all that. But I kept at it and I decided to take it seriously. So hopefully you take it seriously too. Buy a textbook. And take it seriously, respect your money, and hopefully that will work out over time. But if you're struggling, bet less, right? Bet less, use a trading journal, write down what's going on so you can learn from your mistakes, and give yourself time. You have to learn mistakes to become a better trader. So hopefully you've enjoyed this. Hopefully these words of wisdom are reaching you. And I will hopefully talk to you folks soon. If I don't, I hope you have a wonderful holiday season. I hope you're all doing well out there. Until next time, Big Ched's out.